participated in the challenge and prepared a report on Mizan Bank. These teams were guided by industry mentors and faculty advisors. The reports were graded by a panel of graders comprising of senior investment professionals. The top 5 performers on the report will today present their investment case in front of our esteemed panel of judges. The score of the report combined with the score of the presentation will determine the overall winner. So let's see which team wins the Pakistan final of the Research Challenge 2020-21 this year and proceed to the sub-regional round. I'll do a quick glance over the agenda for today. We'll have presentations for the first 2 teams, after which we'll have a 15-minute break for Asr prayers. This will be followed by the remaining 3 presentations. We'll then break for Maghrib prayers. Before we announce the result, we'll have a few words by Mr. Mohammad Asim, President of Pakistan CFA Society. It will be followed by a speech by Mr. Irfan Siddiqui, President and CEO of Nissan Bank, who is our chief guest for today. This will be followed by a speech by Mr. Amir Khan, Chairman SECP, who is our guest of honor. Let me quickly introduce the judges in alphabetical order. Mr. Fawad Khan, he is a Director, Center for Financial Studies, Prince Sultan University. Mr. Imtiaz Gadar, he is Head of Capital Markets, Bank Al-Falah. Mr. Naveed Guraya, he is Chief Investment Officer, Karan Das, Pakistan. Mr. Syed Suleiman Akhtar, Chief Investment Officer at UBL Fund Managers, and Ms. Uzma Maqbool, Head of Business Planning and Analysis at TCS Private Limited. A very warm welcome to each one of you. Let's quickly glance through the rules for today's event. I'll start by so I've just shared the slide on the rules. Is it visible, Savat?
Yes, it is. Thank you.
Okay. So I'll start by going over the rules and instructions for the participants. Participants are requested to rename themselves as their own name, followed by their team name. Participants are requested to stay in the main meeting room until they are invited to the breakout room for their presentations. Participants in the main meeting room are requested to stay on mute and turn off their videos. Each team will be given 10 minutes for presentation, followed by a 10 minutes Q&A session with the judges. A moderator will prompt 1 minute before the end of the presentation. Please make sure you wrap up whatever parts of the presentation is left within that last 1 minute, as you will not be allowed to go over the 10 minutes allocated time. All team members are requested to keep their videos open during their presentation as well as their Q&A sessions. Participants are not allowed to disclose their university name, and you should only use your pseudonyms. If a participant gets disconnected during the presentation, the other team members must take over. Participants will be requested to leave the breakout room after the Q&A session. Participants are allowed to leave the main meeting after their presentations, and they can join back for the results announcement at 6:45 p.m. Instructions for the judges. Judges are requested to rename themselves as their full name, followed by the word judge. Judges are required to move to the breakout room and stay there till the results announcements, that is throughout all the 5, and stay there throughout all the 5 presentations. Judges are requested to stay muted during the presentation and unmute themselves during the Q&A. A moderator will prompt 1 minute before the end of the Q&A session. So if there is any important question left, you can ask during that 1 minute. And also there is going to be a prompt at the end of the 10-minute Q&A session. We'll give there will be a transition time of 5 minutes between presentations. As I mentioned, there will be a 15-minute namaz break for Asr and Maghrib. Judges can enter the team scores on the online evaluation sheet during the transition period. The tabs in the evaluation sheet are arranged in the order of presentations. Let's look at the order of presentations for today. First presenter will be Team Data Miners, followed by Team Phoenix. Number 3 would be Team Straddle, then Team Viper, and then finally Team Young CFA. So I think we are all set to start to invite the first team, which is team data miners, to join the waiting room and commence their presentation.
Thank you, Aswar.
Banking, Mizan's deposits have grown at a 5-year compounded annual growth rate of 19% in comparison to Islamic banking industry deposits of 18%. We expect this growth to normalize, but still at a decent level of average 13% over the next 5 years. Secondly, strong net interest margins with the average of 4.9% over the next 5 years. This is significantly higher compared to the top 5 banks, which had average net interest margins of 2.03% in the past. Finally, improving operating cost efficiency. Our estimates shows a declining trend in the cost to income ratio to 42.1% by 2024 compared to 48.1% in 2019. The second driver is technological innovation, which is positioning the bank well for the next leg of growth. This would allow the bank to maintain or even increase its market share and also reduce the operating cost. Mizan has seen a 20% increase in technology expenses, which is higher than the industry average. Also, Mizan stands at the top with 4.9 rating when comparing the app quality with its peers at Play Store. Mizan is innovating and actively partnering with fintechs like PhonePe, NayaPay, Fori to facilitate customers' payment activity.
Strong and robust. That's how we would describe the loan book of Mizan Bank. Being the most active Islamic lender with a loan portfolio of 525 billion, Mizan Bank outperforms the industry with NPL ratio of 2% and coverage ratio of 141%, clearly providing cushion to the COVID-19 economic shocks. Therefore, in 2020, Government of Pakistan introduced temporary economic refinance facility along with some other schemes of payroll financing and restructuring loans which saved the banking industry from sinking into dark times. Coming to Mizan's Bank current efforts in growing its loan book, our team expects 15.7% upsurge in advances of Mizan Bank because of its aggressive lending strategies like mortgage loans to Naya Pakistan housing scheme. Analyzing the growing investment avenues, we expect the investment to deposit ratio of Mizan Bank to rise to 40% by 2022 as a result of sustainable growth in Sharia compliant investment avenues. Mizan Bank has always been subject to less exposure in investment in the past, but increasing fiscal deficits and high circular debts have led the government of Pakistan to look towards Islamic banks for financial support at comparatively lower cost in the form of issuance of sukuks along with Pakistan investment bonds. Consequently, it seems like Mizan Bank, being the leading one in the Islamic banking industry, is going to be the utmost beneficiary of increased investment avenues.
Coming to the valuation of Mizan Bank, we have used a blended approach by combining 3 different methodologies to arrive at the final target price of 155.9, offering a potential upside of 37%, which are justified price to book, dividend discount model, and relative price to earnings valuation. To compute the cost of equity, we have used capital asset pricing model. In this, the 10-year average PIB rate was used as the risk-free rate in conjunction with a market risk premium of 7%, which is higher due to the adjustment of emerging market risk, where the beta was based on 5-year stock prices of Mizan Bank regressed with KSE 100 index. The justified price to book is thought to be the most appropriate method of valuation, as banks' assets and liabilities are constantly valued at market rates. Hence, given a higher weightage among all of 50%, using an average ROE of 24.7%, we have arrived at a price to book of 2.32, which is almost double as compared to Mizan Bank's peers. We have used dividend discount model to take into account the positive cash flows allocated to shareholders. However, it has been given a lower weightage of 25% because it lacks focus on management efficiency and growth prospects. Coming to relative price to earnings valuation, based on the comparable multiples, Mizan offers low expected upside, thus given a lower weightage of 25%. However, we believe that Mizan Bank should trade at a higher multiple as compared to the top 5 banks because of its rapid growth. The major concern for Mizan Bank's investors is its premium price. So in order to justify that, we have plotted ROE against price to book of top 6 banks, and we can clearly see in the graph that Mizan is at the top right corner, scanning well on both the metrics.
Amid our favorable growth outlook, we also recognize some of the inherent business risks. Firstly, higher than the expected NPLs. With the prevailing pandemic and other challenges to the already struggling economy, it would not be an unrealistic concern to underpin the increased risk of default on principal or interest payments of loans. Secondly, risk of higher competition eroding market share. Despite the growth of Islamic banking market in local landscape, with the arrival of new Islamic banks as well as Islamic windows of conventional banks, the competition for market share has become more severe. Thirdly, risk of being included in domestic systematically important bank. Keeping in view the exceptional growth of Mizan Bank, it can be included among DSIBs in the future outlook. Thus, Mizan will have to maintain higher capital adequacy ratio. Some other risks are implementation of IFRS 9, the unexpected change in benchmark rate, and insufficient supply of Sharia-compliant investment instruments. However, we believe that Mizan can mitigate these risks with the efforts implemented by competent and experienced management who are committed towards delivering a sustainable growth. Mizan has proven to be an environment-friendly bank as they are playing their due role in transforming the country by promoting and leading Sharia-compliant green banking initiatives. Mizan provides green Islamic syndicated financing solutions for the environment-friendly projects based on wind power generation plants. Mizan handles the highest number of wind power generation plants among all the local banks with the total capacity of around 200 megawatts. These initiatives will contribute towards a global cause of reducing carbon footprint and inducing environment-friendly sustainable growth.
Mizan Bank is playing a great role in supporting SMEs and microfinancing through partnership with Karandas Pakistan. MEBL is expected to be a key player in Naya Pakistan housing scheme. Moreover, it has partnered with different health and social sector institutions. The shareholding pattern comprises of 25% with the general public and the rest with esteemed financial institutions like Noor Financial Company, Pakistan Kuwait Investment Company, and Islamic Development Bank. So let's recap the main points behind our buy recommendation. Strong and sustainable profitability, innovation in technology, robust loan book, and growing investment avenues. So with the target price
Last 1 minute left, please.
With a target price of 155.9, having a potential upside of 37, accompanied by a dividend yield of 6.2%. This is Mizan Bank, a perfect blend of quality and growth. Thank you. Now we are open for questions.
Shall we proceed with questions?
Yes, please.
All right, so my name is Naveed, Judge 1. Considering we have only 10 minutes of questions, I'd like you to restrict your response to 1 minute. You've spoken of profitability as the primary or a major reason, and sustained profitability, in fact, for a very big reason for your buy recommendation. You also mentioned net interest margins of 4% and above, which is twice that of the market. Why is that so? And why do you think the net interest margins would remain there? Isn't there a risk of competition coming in from windows? So if you could please respond.
So about the net interest margins, in 2020, due to the spike in interest rate and aggressive repricing of deposits, the net interest margin were at its peak at 5.6%. And in 2021, with the situations normalizing and interest rates going up, we believe that in the near term, the NIMs will be affected. But in the long term, the Mizan Bank is expected to sustain its NIMs at 4.5%. About the competition, Tisha?
So Mizan Bank is unparalleled in the Islamic banking arena, as other banks are not close to them. The main competition, which we assume can be from Faisal Bank, which has a deposit of 500 to 600 band. But we believe that with Mizan Bank having 1.25 trillion and a brand value of Mizan Bank, which is basically used as a synonym to Islamic banking in Pakistan, So catering in the brand value and the superiority in terms of deposits as well as its quality, Mizan Bank can sustain and its profitability.
I would like to add here a point that Mizan Bank is expected to sustain its NIMs because it has an advantage of having no MDR. It will likely have low funding cost.
Thank you. Appreciate it.
I have a question. I'm Judge Force, I guess, Salman. It's regarding their ESG policies. Can you elaborate further on their environment, social, and governance policies? I mean, uh, for instance, what's the percentage of women in their
Okay,
bank?
sir.
Or
Okay. Shall I start?
yeah,
Okay, sir, there are total 12 projects that government has issued the license to the banks of wind power projects, 12 projects, and Mizan handled the highest number of projects. These are 4 projects. One is with NASDA, other is with Gul Ahmed, and a third one is with Electric Power Plant, and the fourth one is with again NASDA. So these are the 4 projects that they are handling. Other than that, they are planning to implement solar ATMs. So in order to save the energy, they have implemented LED lights throughout their branches to save the energy. Other than that, they are also trying to implement green concept of green banking in their organization for green environment risk management department.
but that is environment. How about social and governance?
Okay.
Anything on that?
Yes, sir. So in governance, basically Mizan Bank has twin governance. It has board of governors, as well as Sharia board, which is headed by Mufti Taqi Usmani Saab. So it is basically the core aspect of this company, Mizan Bank. And moreover, coming to the social aspect of it, it has collaborations with Karan Das, Pakistan. And what it does is Mizan Bank, being the Islamic bank, its interest margin or its late payment margin is being donated to different organizations Ehsan Trust and other organizations. So it holds a social aspect as well.
So about the governance, it has a proper succession planning, and there are people with diversified expertise on the board. And we believe that in the long term, there are many qualified people who can continue the legacy of Mizan Bank of growing rapidly.
Okay, I have one more question. Quickly, you have used multiple valuation techniques. Wouldn't it be better if you had used a single, I mean, valuation technique like two-stage Gordon growth model? I don't understand the rationale behind using, 3 different valuation techniques. Um,
Sir, it wouldn't have been appropriate to use just two-stage dividend discount model because it doesn't take into account the growth of Mizan Bank. The growth of Mizan Bank is related to its industry. The overall industry has been growing, but Bank has been sustaining its market share at 36%. The overall we can see it by the historical results. In 2014, the whole Islamic banking industry had 1 trillion deposits, and now in 2020, September 2020, Mizan Bank itself has 1 trillion deposits. So the growth prospect should have been taken into account, and Mizan is a growth stock. So that's why we have given a higher weightage to justified price to book. And in order to compare it with its peers as well, we have incorporated relative price to earning valuation.
but why the dividend discount model?
So to incorporate the effect of positive cash flows allocated to shareholders, that's why we have used a blended approach and we are not relying on a single approach.
I want to add more here. For the DDM, it does not take into account the management efficiency and growth prospects. So we have given a weight of 25% to the DDM as compared to the relative valuation. With this, we came at a target price of rupees 120. We know that Mizan is a growing bank and it has a superior growth in ROE, which justifies the willingness of an investor to pay a premium price. That's why we have here used a 25% weight as compared to the justified price to book. We have used 50% weight because we believe that the assets and liabilities are constant, are treasured at market values, and this justifies the higher price with the higher spread between the ROE and growth.
Okay.
Are you done? After, can I start? Okay. You've, Assalamu alaikum everyone. You've placed 50% weightage on price to book when you're valuing this company. So which means you've got a good trust on this bank's loan book, book value. So when we come to book value, let's talk about this loan profile and the loan book that they have and the NPLs. Can you tell me which industrial segment is the main contributor in the loan book and when for Mizan Bank?
Mizan Bank is allocating its higher proportion of loans to individuals. So that is the main reason it is not sensitive to the interest rates and it can continue to grow. And
so it's main, but in basically it should be in government and security then, if it's not corporate.
Ma'am, also it also has an exposure of government public sector because when we compare the performance of Mizan Bank with 2008 financial crisis, its NPL were a lot higher, and during the times of COVID, its NPL only increased slightly from 2.1 to 2.45%, and it was managing very well, and it also increased its general provisioning.
1 minute left.
Which is providing buffer to its profitability.
I want to add, Mizan Bank has a coverage of 140%. So I think it could provide a good buffer to the bottom line earnings.
So if other judges don't have a question, I have a follow on. Could you briefly talk about the industry and also if you've taken any international benchmarks when looking at price to book values?
Yes, sir. We have taken into account the international price to book. We can also see the Al Saji in Saudi Arabia, which has a price to book of 3.4, and Kuwait Finance House, which is also trading at a premium price with a price to book of 2.4. So this price is pretty much justified.
Thank you so much. I think your time is up. I would request the team to please exit the room.
Okay, so thank you so much.
Thank you so much.
Thank you.
May I request the judges to please fill your evaluation form? You have 5 minutes before we bring in the new team. You may start your presentation.
We are here to present on an opportunity that caters to the needs of people and makes banking accessible to the conservative masses of the country. From an industry that skeptics doubted to survive to being the 5th largest bank by deposits, we present to you Mizan Bank with a buy recommendation for December 2021, a target price of 158 and an upside of 44%. Islamic banking industry held a 19.5% share in industry deposits in 2020. We expect IBI deposits to grow at 16.4% CAGR because of 3 reasons. Firstly, State Bank is committed to increase deposit share of Islamic banks to at least 25%. Secondly, compared to Islamic banking share in Bangladesh and Malaysia, where it is 24% and 40% respectively, Pakistan's 19.5% share is yet to grow. And thirdly, Pakistan's deposit to GDP ratio is at 42% compared to Bangladesh's 48%. We expect this ratio to climb to 45 at least, given new initiatives like Roshan Digital and Rast, hence growing the industry at 10.3% CAGR. Next, Policy rates are expected to remain in single digits in the next 5 years with a rate of 7.75% as of the end of 2021. Therefore, we issue a buy call on Mizan Bank because of three factors. Number one, deposit growth will sustain earning and grow asset book. Number two, asset deployment will improve with increasing investment avenues. And number three, advances will scale while maintaining asset quality. With leading deposit share of 36% in growing Islamic banking industry, Mizan Bank's deposit will grow at 16.6% CAGR because of three reasons. Number one, bank's branch growth network will grow by 9% CAGR to support deposit growth in a still unbanked country with a banking penetration rate of 26%. Number two, bank continues to outperform on digital front with its stellar performance in Roshan Digital account with highest deposits received, highest digital readiness score in our surveys, and its top rated banking app. And number three, bank's deposit share in industry deposits will increase from 7% to 9%. Mizan Bank's net interest margin will trend downwards in 2021 and average at 5.6% in our forecast horizon because of two reasons. Firstly, in 2020, the NIM was augmented to 5.79% because assets follow a lagged repricing with the reduction of policy rates from 13.25% to 7%. The 2021 NIM will trend downwards to 5.08% as the 7% rate will finally be included in the earnings from assets. In the longer term, NIMs will increase as the interest rates increase steadily and asset deployment improve because of newer investment avenues. And secondly, the cost of deposits reflect a spot change in policy rates with low policy rates of 7% and our forecasted single-digit policy rates. We expect the cost of deposits to remain low. Further, Islamic banks have no minimum deposit rate requirement like conventional bank of repo minus 50 bips. This keeps costs down and NIMs up.
We forecast increased investment on the back of three avenues: fiscal deficit, circular debt, and project financing needs. Ijara sukuks, which are issued to fund the fiscal deficit, have seen a resurgence in 2020, with Ijara on Mizan's books rising by 1,300% year on year. We forecast continued increase because A, the government wants to shift its debt to 30% Islamic, B, the government has identified suitable underlying assets, and C, it is a matter of survival for the government, which needs to shift 5.3 trillion in borrowing, representing 30% of deposits from the SBP to local banks. With annual fiscal deficits adding further to the debt burden, we forecast that the conventional space falls far short of lending requirements. Despite past energy sukuk issuances of 400 billion and 150 billion in the pipeline out of a total of 450 billion, we expect continual increase. This is because 86% of the debt accumulation is still pending and it's growing at an alarming 22% CAGR. Given that the IMF is intent on resolving this debt, we believe that resolution is a key government focus. Furthermore, given that Islamic debt instruments cost less to the government than conventional ones, we believe that they are attractive sources for funding in the future for upcoming project needs. The impact of efficient deployment can be benchmarked against the industry, where IDR and dues over deposits were 64% and 6% respectively in 2020, compared to Mizan's 38% and 27% respectively. We forecast efficient deployment to close this gap, bringing Mizan's IDR and dues over deposits to 48% and 13% respectively by 2025. This change will boost the top line of the bank by 22 billion rupees over the forecast horizon and boost ROE by 200 bips.
Advances being a function of GDP growth and interest rate is expected to rise at a CAGR of 11%. We forecast the real GDP growth and policy rates to remain range bound. Mizan's advances market share has risen by an average of 13.5% year on year. The current market share stands at 5.8% and we forecast it to grow to 7% by 2025, taking the total financing portfolio to cross 1 trillion by 2025. The ADR has been on a contracting journey from 65% in 2018 to 53% in 2019 due to opening of liquidity deployment avenues, and we forecast the ADR to stabilize at 41 to 42%. The spread from financing has ranged from 40 to 60% of the total spread earned. The movement of financing spread has been in line with the trend in economic activity reflected by LSMI, with macroeconomic improvements since Q4 of 2020, LSMI up by 11.4% in December 2020. The high sensitivity is explained by financing mix comprising of 69% corporate lending and remaining 31% distributed to retail and SMEs. MEBL's financing portfolio is poised to benefit from economic recovery, and we forecast the spread over LIBOR to remain at least 100 pips. MEBL has prudent credit approval practices, high coverage, greater due diligence, and increased involvement with the client. 2020 was a testing year for the asset quality of the industry. And industry infection ratio took a hit due to COVID-19 crisis, increasing to 9%, while only a marginal increase was observed in Mizan's infection ratio at 2.8%. Mizan coverage ratio also remained strong at 129% in 2020, while the industry coverage ratio is expected at 90% on average. The low infection ratio with a higher coverage ratio presents an unparalleled asset quality. MEBL showed a 43.7% growth in profit after tax in 2020. Impressive increase in PAT was largely backed by the increase in net spread due to low deposit expense and the high profit earned by lag repricing. Over next year, we expect PAT to increase at a CAGR of 18% as average earning in assets increase rapidly, while single-digit policy rates keeps the profit earned lower. Cost to income bottomed out at 40% in 2020, owing to higher than expected earnings and less proportional branch growth. We forecast higher cost to income in the upcoming year as OPEX continues to grow at a 12% CAGR, then a resumption of downward trend as the deposit utilization kicks in.
We have assumed a cost of equity of 14.5% and growth rate of 3.9%, given that the balance sheet is marked to market and exhibits a strong relationship with ROE. We've given justified price to book value a weightage of 70% in our valuation. With average ROE of 31.9% over the forecast horizon, we have calculated our justified price to book value of 2.63 times. We acknowledge that this multiple is above the industry median of 1 to 1.5 times, but higher ROE of MEBL relative to both the domestic and even top 10 global Islamic banks justifies the higher price to book. We have identified two key risks to our buy call. Number one, the expected interest rate hike of 75 bips in 2021 may be delayed if inflation doesn't catch up, which will delay the earnings of 14 billion rupees over the forecast horizon. However, with LSM improving to pre-COVID levels and economic growth catching, an interest rate rise is all but imminent. Number two, another risk that we have identified is the rising competition in the Islamic banking industry, especially with the entry of Faisal Bank. However, with the strong focus on individuals and a vast branch network that's constantly growing, we believe Mizan is well placed to maintain and grow its share. We evaluated MEBL's ESG efforts using the CAMEL and MSCI's criteria. Under the MSCI's criteria, a score of 6 has been awarded to the bank on bank's environmental standing. 6.5 has been awarded on the social front. The bank is awarded 8 for governance because of a competent board, compliance with corporate governance regulations, and dual board structures. Based on MSCI's criteria, we've computed an overall score of 7.5 and a rating of A. Concluding, we issue a buy call at MEBL due to the upbeat deposit growth, improving investment avenues, and scaling advances while maintaining the quality. We are Team Phoenix. Thank you for listening. We open the floor for questions.
Thank you. May I request the judges to please ask the questions now?
Okay, I have a question regarding your valuation. Why is your growth rate too low? I mean, 3-4%. What's the logic behind that?
I can take this one. So we have assumed a growth rate of 3.9% as it is a proxy of the real GDP growth rate in next 5 years. And we have used this growth rate instead of a sustainable growth rate because we believe that the real GDP growth is in line with the bank's growth because of the greater macroeconomic alignment of the bank's growth and the GDP growth rate.
Well, I think you should have used the nominal GDP growth rate rather than the real GDP growth, because normally banks grow with money supply growth. I mean, their deposits grow normally more or less at the same pace. For Mizan, I mean, it is growing above the M2 rate. So using the real economic growth rate, I think, does not make sense in case of banks. You have to use the nominal GDP growth rate and money supply. I think those are the determinants.
Uh, okay, but we assume that the real GDP growth rate is in line with the true picture of how the bank can grow.
Yeah, but you can see, I mean, banks deposits are grow in line with the nominal GDP growth rate or money supply growth rate, and so do their earnings. I mean, it's
Okay,
not like a manufacturing industry; it's a financial institution.
all right. We tested for this scenario, but if we assume a very higher growth rate, that yields a very high valuation in terms of 700 or 800 rupees per share, which won't be
Maybe you
which
are
won't be.
sustainable, or you have to tweak your sustainable ROE assumption, I believe. I
Okay.
mean, on a sustained basis, no bank or no entity can earn 30% or 35%.
Yeah,
So in
sure.
the long run, they grow roughly in line with GDP growth rate, maybe slightly above that, but growth definitely can't be 4%, in my opinion. It
All
should be
right.
more.
Assalamu alaikum. This is Fawad Khan, judge number 2. I hope you can hear me. Okay, sure. Well, my question relates to the capital adequacy and the deposit growth or the overall ROE. Mizan Bank is the top 5 banks now. How this status of the being the top 5 bank can affect the capital adequacy, and how it would impact the bank's valuations that you guys have done.
I can take that question. Okay, so the capital adequacy currently stands at 17.8%, which is well above the minimum required of 11.5%. Going forward, we expect that based on a payout ratio of nearly 45% and an average return on equity of 30%, this ratio will band of 18% to 20%. So going forward, this ratio can be seen as increasing.
Okay, sure.
This is Naveed Guraya. I would like to ask you, I'm glad that you addressed the competitive landscape question in your presentation, but I'd like to talk a little bit more about it, and very briefly, please. The current landscape assumes that Faisal Bank will be entering, but then there is also growing competition from windows like HBL Islamic. And given that, how do you justify the deposit growth rate? Do you feel that there should be a greater sensitivity to that?
I can take this question. So if you could go to the appendix 4A. So currently we have 5 Islamic banking full-fledged institutions operating in the market, which has like 10% market share of the whole Islamic banking industry in the pie. But as of moving forward, we believe that Mizan will very likely obviously fight for its share, but it will maintain and grow its share from current 36% to 37%. And with the entry of Faisal Bank, which has almost half of the size of a book as compared to Mizan, we believe that it will be a competition, but Mizan is very well equipped to cater that because of the one very fundamental reason. Mizan Bank's deposits comprise of around 67% of the individual accounts, which doesn't match to any of the bank in the whole industry. And as we move forward and push for the growth in the industry, where we have banking penetration of like 26%, and we are yet to reach at least over 50 to 52%, there will be more of the individuals coming into the banking sector. And with current positioning of Mizan as a very individualistic bank as compared to any other bank in the industry, not only just Islamic, Mizan will maintain its share and even grow more than that. I hope it answers your question, Sir Naveed.
Yeah, thank you very much. Appreciate it.
Yes, this, number 3. I'll just expand on the same question about deposit growth. You said they're going to increase their deposit share. How?
So
And don't you think they might have reached their plateau by now?
can you repeat it? Your voice was breaking.
My question is that you think they'll increase their deposit share. How? What
Okay.
possibilities that what they increase it, because it's a cutthroat field now with everybody coming in. Plus, my second question linked with that is, I'm sorry, I just forgot what I was saying. Deposit growth. How do you think that it will remain? Don't you think it reached its plateau by now? Because banks in the initial years do grow very aggressively, then they get stabilized at a point. Don't you think the stability levels are there now?
Okay, so as compared to 2020, you are very right that our deposit base grew at industry deposit base grew at a 22% CAGR. But as we move forward, there will be a stabilization at where we project that around MEBS deposit will grow at a 16.6% CAGR, while industry will grow at a 10.3% CAGR. But still, the growth coming in will be from the aggressive branch expansion of the bank. The last 5-year CAGR of the branch expansion of the industry has been the 8.8%. However, we are projecting that Mizan will expand their branch network at a rate of almost 9%. And the bank is very well equipped to do that because of its low cost to income ratio as compared to the whole industry. And secondly, we are still an unbanked country and we are yet to adapt to that digital transformation, which will not come into the 2 or 3 years, but in the next 4 to 5 years when we see the RAS platform going live. So that's where the more growth will come.
Do they intend to go into the rural areas to do that? When you talk about unbanked economies, they're going to increase more branches in the metropolitans or just go into the rural areas, because that's where the unbanked society is more of it.
No, the major branch network will indeed be in the province of Sindh and Punjab, where we will focus more on the conversion of the people into the banking sector. Because,
Okay, this is Imtiaz. I had a question on something you mentioned during your presentation, highest digital readiness. You mentioned that you've done a survey of your own. Could you just shed some light on that?
I'd like to take that question. So very recently, in preparation for this, for the challenge and to prepare our model and our understanding, we conducted a survey for mostly students, and with our sample was of approximately 130 people, and they were mostly students, which means that they are the bankers of tomorrow, people who will be going very recently to open a bank and will most probably bank with that existing bank for the rest of their lifetime. So in that survey, we found that most people were either banking with Mizan Bank or wanted to bank in Mizan Bank.
Left.
Additionally, they thought when we tested for their perceptions, we found that they believe Islamic banks are superior to conventional banks, which gives Mizan a very big headroom to grow because Mizan is the biggest Islamic bank. Additionally, as we talked about in the digital section, from a digital perspective, Mizan Bank is leagues ahead of ahead of the conventional peers. So we find that both our research finding and the digital readiness scores are able to support what we found.
Okay, thank you. One more question. I think we're short of time, but you mentioned a couple of times in the presentation that you're seeing interest rates to remain single digits for 5 years. Now, what's driving that belief or that view?
I can take that question. Can you go to slide number? Wait a second. Yeah. Okay. So currently, the inflation rate is over and above the policy rate because of the fact that the state bank.
Your time is up. May I interrupt? Your time is up.
Thank you.
No worries. I do get your point. Your graph is answering, I guess, the point you were referring to. So thank you so much. Not a problem. If you didn't even complete the answer, I get the gist.
So thank you, Team Phoenix. I'd request all of you to please leave the breakout room. I do request the judges that you have 5 minutes to record the evaluation. And I would also like to welcome Mr. Irfan Siddiqui, the CEO of Mizan Bank, who has just joined the breakout room. So thank you, team.
Thank you.
In 2002, when the SBP issued its first ever Islamic banking license in Pakistan. Mr. Irfan Siddiqui, the current CEO of MEBL, was fundamental in setting up the bank, and under his leadership in over 19 years, MEBL has witnessed phenomenal growth, depicting a deposit CAGR of 22.1% over the 4 years. The number of branches has increased from a mere 16 branches in 2004 to a staggering number of over 800 branches today. MEBL has 2 major long-standing sponsors who have shown significant commitment to the bank, Noor Financial and Pakistan Kuwait Investment Co. It comes as no surprise, therefore, that MEBL has won many awards, including the Best Bank of Pakistan and 2 global awards from the IFN. Moreover, the bank also operates an asset management subsidiary known as Mizan Investments, which is one of the largest, with AUMs exceeding 177 billion rupees. The conditions of MEBL bring about in mind Mr. James Cash Penney, who once said, "Growth is never by mere chance. It is the result of forces working together." These forces can be witnessed in the exceptional journey that MEBL has undertaken. MEBL has demonstrated deposit growth, making the industry growth appear muted at a 4-year CAGR of only 12.2%. This will lead to it gaining much traction and showcasing incredible progress in the market. The bank is also one of the only 2 banks in Pakistan with a coverage ratio exceeding 100%, with an infection ratio well below 2.5%, indicating superior asset quality. The absence of a price floor on savings deposits for Islamic banks will play a vital role in providing MEBL with low-cost funding, which would lend further support to its profitability. The growth of the bank does not appear to be slowing down anytime soon and warrants a buy recommendation with a target price of 156 rupees at a 39% upside.
Now, moving on to financial analysis and starting off with deposits, Mizan has shown amazing success with respect to deposit growth, with the historical CAGR 2x times that of the banking industry, and we forecast the bank to further grow its deposits at a CAGR of 14.2% over the forecasted period of CY 21 to 27. Moving on, the COVID-19 pandemic affected the economy significantly, causing the advances of the entire banking industry to take a hit. However, Mizan still managed to maintain the highest ADR among the top 6 banks over the
We've lost the voice. Can somebody else take over? Team Straddle, I can't seem to hear you.
Team Straddle, you're on mute. If you could kindly remove yourself from mute. Thank you.
We valued MEBL using some of the parts by valuing both MEBL and its subsidiary Mizan Investments separately. We used residual income valuation, 2-stage GGM, justified price to book, and relative valuation methodologies to arrive at a target price of PKR 146.59 for the banking operations. Moreover, Mizan Investment, the asset management company held by the bank, was valued using discounted cash flows and relative price to book, which gave us a target price of PKR 9.52 per share. Together, the sum of the parts value for the bank along with its subsidiary comes to PKR 156.11, representing a 39% upside to the last close of 15 January 2021. To calculate the cost of equity for Mizan Investment, we converted its levered beta into earned levered beta. The process included extracting the levered betas of two similar listed companies, GS Investment Limited and MCB Harif Saving and Investment Limited, and unlevering them. Following that, we calculated the median of this unlevered betas, and finally, we arrived at the cost of equity for Mizan investment using its debt to equity ratio. Our multiples analysis yielded a relative valuation of PKR 133.39 for the banking operations and was assigned a 15% weightage in our total sum of the parts valuation. Since MEBL is the largest Islamic bank in Pakistan with an exceptionally high ROE of 30.66%, we chose the topmost global Islamic bank in our comparable set and a few domestic banks as well. Our price to book peg suggested that MEBL is trading at a price to book multiple of 1.62, which is significantly lower than the 5-year price to book value of 2.08. Similarly, our price to earnings suggested that MEBL is trading at a price earning ratio of 8.66, which is lower than the price earning of 11.41 than it peers, suggesting that MEBL is fairly undervalued and has great growth potential.
So, our target price may be impacted by certain risks, which are displayed in this matrix. However, as you can see, only two of these risks lie in the high impact, high probability area. Coming on to the first risk, that is the lack of investment avenues. Mizan, being an Islamic bank, cannot invest in fixed income government securities, and currently it relies upon the GOP Ijara Sukuk and sometimes on the Pakistan Energy Sukuk. Looking forward, if there is any decrease in the amount or yield of these Sukuk issuances, it can create a negative impact for Mizan Bank. Also, Mizan has been following an aggressive branch expansion policy, and the downside of this is an increased OPEX to income ratio. We expect this ratio to go up to 60% by CY27. We also conducted a sensitivity analysis to see the impact of certain variables on the EPS. As you can see over here, the EPS is relatively stable to changes in policy rate and ADR. However, the impact is much greater when it comes to the OPEX ratio. We also evaluated the bank based on the CAMELS framework. This framework uses 6 factors to assess the strength of a bank and then outputs a score between 1 and 5. Mizan, backed by a strong capital adequacy, liquidity, and earnings, had a robust score of 2.4.
Moving on to ESG. To provide a global perspective, we use Bank of America's ESG materiality matrix to determine which ESG issues were most relevant to the bank's stakeholders and core business strategy. As you can see, the matrix divides these issues into 4 areas based on priority with reference to the stakeholders and business success. These issues are grouped into governance, environment, social, or people. Keeping in mind the nature of the Islamic banking industry, importance of Sharia compliance, and the rise of green banking in Pakistan, we assessed MEBL's transparency in terms of these key ESG issues. The higher the transparency, the higher the score. Based on our assessment, MEBL scored 77%, which was in line with its premier Islamic bank positioning and rapid growth. MEBL is known for its esteemed and highly qualified board and Sharia supervisory board that ensure a systemic risk management and ethical organizational culture, as well as benefit the community through financial protection and investments. Based on SSB's recommendations, MEBL has great scope for improvement in the field of digitization, innovation, and green financing solutions. Furthermore, MEBL scored 88% for governance and 85% for its sustainability and CSR, according to the corporate report evaluation criterion of ICAP and ICMA. This rating reflects MEBL's strong commitment towards sustainability and regulatory compliance.
A recovering economy will lead to more investment and lending opportunities for banks, helping a robust growth in loans and advances, providing the market with much anticipation towards the performance of MEBL and its capital. Hence, we reiterate our buy recommendation
1 minute
with
left.
a target price of 156 rupees, a hefty 39% upside. The only way to go is up. Thank you.
If that is all, may I request the judges to please ask the questions?
Certainly. This is Naveed Goraya. Thank you for the presentation. I have one question. We lost your voice somewhere in the middle, so maybe you covered it, but I'll be grateful if you can describe again in not more than 90 seconds. Industries, fee income, versus funded income. Compared to that ratio, where do you see Mizan Bank? And is there any avenue on the overall quality of earnings that you like to address? So just the top line of that, please.
Okay, so Mizan has maintained efficient capital management on account of prudent lending practices, leading to a loan coverage of 140% during 9 months CY20, compared to the average of the other top 5 banks, which stood at 95.6%. Also, the infection ratio of Mizan stood at 2% in 9 months CY20, which is much better when compared to the average of the other top 5 banks, which stood at 7.3%. Can we go back to the appendix network?
Mr. Has your question been answered? Should I ask the question?
Gee, if the team has nothing more to add, I'm fine. Thank you.
Okay, this is Fawad Khan. I'm judge number 2. I have a question on the valuation. You mentioned something about the taking into account GS investment as the deleveraging benchmark. So just 2 questions on it, which are interrelated. Number 1, why you have chosen JS Investment and other investment company for deleveraging the beta? Secondly, why there's an how do you determine the leverage in a bank?
Could you please move to part E1? Okay. So for Mizan investment, as you asked, we had calculated the, okay. So the cost of equity, we had calculated the cost of equity using the beta slope method. So first of all, we arrived at the risk-free rate, which comes to 9%. For that, we had taken the average of the 5-year and the 10-year bond yield. So that amounts to 9%. Similarly, for the risk premium, we had taken the industry data from the PSX for 20 years. And after that, we had calculated the excess equity return, which comes to 6%. And we had arrived at the beta using dividing the covariance by the variance. And finally, using the CAPM formula, we arrived at the cost of equity, which comes to 13.4%. Okay, now move back to levered and levered beta, please. So as you can see here that for calculating the cost of equity for Al Mizan investment, we converted its levered beta into unlevered beta. As you can see, the levered beta for GSLI and MCB RF Habib comes to 0.49. After that, we applied a formula and we had converted it to the unlevered beta. We selected these 2 companies because they were listed, and since Al Mizan investment is not listed, we had to take the median of these 2 companies. Can you please move back to appendix? Please come to levered unlevered beta E15. E15. Okay, so as you can see, the formulas that we took for converting the unlevered beta into levered beta are as follows: levered beta into 1 minus tax rate into debt into equity. And as I said, the median of the 2 listed companies, JSIL and the MCB's unlevered betas medians were calculated. And finally, using Al Mizan's debt to equity ratio, we arrived at the levered beta for that, which comes to 12.21%. Have I answered your question?
Yes, sure. Thank you.
Okay, so just adding to this, the reason why we choose JSIL and MCB RF Habib is because these are the only 2 companies that are operationally similar. That's the closest we can get in terms of listed companies to value Al Mizan.
Okay, We lost you somewhere in between. So can you just summarize what are the three drivers that you're saying for this bank? Plus, when you look at the risks and on your slide, you said high probability and high impact. One is lack of investment revenues, and the other is more than expected increase in OPEX to income ratio. Basically, you're saying the P&L is going to go bad, and the balance sheets, like the investment revenues, are not going to be there. So how are they going to? How is it going to buy then?
Can you repeat the question?
Ma'am, could you please repeat the question?
Okay, we lost you in between. So just give me quickly three drivers, what you have for this bank. Plus, can you just elaborate more on the high probability, high impact risk? First, you're saying lack of investment revenues, which means balance sheet risk. Then you're saying R4, more than expected increase in OPEX to income ratio. So they're going to spend more than the income. Where does the value come from then?
Okay, so as far as the first risk is concerned, it will directly affect the investment to deposit ratio. Yes, it will affect the balance sheet. And for the second ratio, for the second risk, OPEX to income ratio, it will pressurize the profitability of the bank. We expect this to rise to 60% by CY 2027. In CY 27, it will stabilize to 60%. Right now, it is at 44%. And the reason why we expect this to increase, the reason why we expect this to rise is the aggressive branch expansion policy by Mizan Bank, which will lead to higher administrative expenses and operating expenses.
What about the drivers, key drivers?
Please come again, ma'am.
What about the key drivers? Your presentation is not like clear on what are the three basic things that which should compel me to buy this stock.
Yeah.
Ma'am, since we have connectivity issues, the person is coming.
Okay. So there are major points because of which are like the drivers for this stock. The first one being that MEBL has demonstrated deposit growth, which makes the industry appear muted. Now, the industry is operating at a 12.2% CAGR over the 4 years, and this will lead to MEBL gaining much traction and showcasing incredible progress in the market. Other than this, MEBL is also one of the only two banks in Pakistan with the coverage ratio that exceeds 100%, while the infection ratio is also well below 2.5%. This indicates superior asset quality. And also, MEBL has the unique advantage of an absence of a price floor on savings accounts, which will lead to low-cost funding, which will lend further support to its profitability.
Okay, thank you.
One minute left.
Suleiman, you're going ahead with your question?
Yeah, one question. Can you go back to the valuation? Relative valuation. You did relative valuation also. Can you go back to that?
Appendix slide. Sir, can I please? Sir, मैंने कर दिया. Sir.
No, there is an other one. I mean, it's been in that
Okay.
there was some international, I think,
okay.
comparison.
Yeah, I'm
I think that you use that for a relative valuation.
Yes, exactly. Let me slide share, please.
Slide 17.
Okay.
So your time is up, and I'm just waiting for you to quickly answer the question.
Yes. Yes, so here's our international comparison for the relative valuation.
So my question is, why have you used these international peers? I mean, because the interest rate there will be different from that those in Pakistan. I mean, why have you used the international comparison or regional comparison?
Sir, first of all, when we came to the domestic market, we did not have any other Islamic bank competing at the level that where MEBL is standing. So we only included Bank Al Habib and a few other banks domestically. As far as the interest rate is concerned, we had incorporated it into our absolute valuation models, the residual income model in the two-stage GGM. And since Pakistan is a high-risk economy, so we had incorporated it, the risk is incorporated into the bond yield and has been incorporated in the absolute valuation. For relative valuation, since we had international peers in our comparable set, we had allocated, we had chosen, for example, the Saudi Arabia Al-Rajhi Bank, which is the largest Islamic bank in the world. And in Pakistan, we have chosen the Bank Islami, MCB, and Bank Al Habib. Have I answered your question?
Yeah, but
I would request I would request to end this because we are over time.
Okay.
Thank you. May I request the team to please leave the room, and may I request the judges, they have 5 minutes to fill in their evaluation sheets.
Is my screen visible?
Yes, your time starts now.
The fastest Pakistani bank to reach ₹1 trillion in deposits. Mizan Bank represents a remarkable corporate growth story. Ladies and gentlemen, Team Viper initiates coverage of Mizan Bank Limited with a buy call and a target price of 100 at 62, offering a potential upside of 42%. Our call is based on the following drivers: banking of the unbanked, moat of Islamic banking, increased profitability, and the hidden gem, that is Al-Mizan. Pakistan is among the world's most underpenetrated and underbanked nations. In the Southeast Asian region, Pakistan is in the low quartile of all banking metrics. Pakistan's financial system stands at an inflection point. With IMF and FATF on its head, the central bank has seized the opportunity the young demographic of the country has to offer. Hence, we believe that with reduced currency in circulation and improved structural policies, banking deposits in Pakistan will grow north of 33.5 trillion by 2025.
Growth is never by mere chance. It is a result of forces working together, an economic moat and an exceptional management, the two forces behind Mizan's success. Value migration occurs when economic and shareholder value shifts to business models that better satisfy customer preferences. In the last decade, Pakistan's banking space has witnessed value migrating from the traditional Big Five losing 7% market share to mid-tier and smaller banks. Another aggressive shift is in the Islamic banking deposits, cutting into a share of conventional ones, making 17% of total deposits. Islamic banks have grown twice as fast in low-cost CASA deposits. This migration is backed by a clear change in customer preferences indicated by a CAP study. The preference towards riba-free banking is developing into a moat for Islamic banks. Customers show a strong inclination to shift, and the prime reason they haven't is the unavailability of a branch in their locality. This shows that the industry growth is far from maturity and there's still a long runway. However, if we dive deeper, there's a distaste for conventional banks that offer Islamic windows. So full-fledged banks hold a 63% share in Islamic market. Here, Mizan Bank is the dominant player at 36%, with the closest competitor at 8%. Despite a huge branch expansion cycle, it is in the top quartile of CASA deposits and is expected to grow total deposits to 2.6 trillion by CY25. So this begs the question, why have other Islamic banks not been able to ride on the tailwinds of value migration? And the answer lies in the extraordinary leadership and execution. A majority of the top team has been with the bank since inception, and several others have clocked in many years. Together, they're keeping competitors at bay in both Islamic and conventional spaces, creating a deep economic moat. Their growth mindset is reflected through consistent reinvestment with the highest number of branches added in 7 years and the largest growth in operating costs.
In the last 3 years, Mizan reaped the benefits of a growth mindset, with earnings being 40% higher since inception, more than doubling core equity. As a result, the bank is set to explore its network with an addition of 600 plus branches and the total to reach 1300 plus. The next leg of expansion is to be rural-centric, with XKLI network to reach 67%. Religious motivation towards Islamic banking will help to capture low-cost of deposits in rural areas. The strength of an Islamic mode allows Mizan pricing power on deposits. The cap study highlights people will forego higher returns to avoid riba-based banking. Although the bank enjoyed higher spread on saving deposits in period of double-digit policy rates, asset deployment is set to resolve. We forecast cost spread to cap at 2.7% despite a 100 bips increase in policy rate, coupled with a granular deposit base, resulting in NIMs to capture at 4.3%. Lack of options in asset deployment made Mizan a forced lender with an ADR north of 60%. With the current regime raising efforts to bring on Sukuk issuances, the bank is set for a breakout period of growth. We expect investments to reach 27% of assets by CY25. We expect credit book to capture the wave of industrialization and to reach 8% market share. However, this time it will be a choice rather than a compulsion, and we expect infection ratio to come down to 2.2% by CY25. Capital adequacy stood second best at 23% as of September 20. With the recent super profitability, along with the lower RWA associated with government-backed papers. Going forward, we feel the capital ratios of the bank are most comfortable since inception. As a result, we expect payouts to stabilize at around 50% and CAR to remain north on 15%. We assume the above indicators to project an ROA of 1.4%. And return on equity to reach 30%, and as a result, earnings to touch 44 billion by CY25 with a 5-year CAGR estimate of 15%. Now that we have discussed the heart of the bank, let's dive into the brain of it.
Thank you, Zen. COVID-19 was a black swan that caught many Pakistani banks off guard with regard to digitization. E-banking transactions volume and value both grew by more than 20%. And following a balanced approach in clicks and bricks, Mizan saw more than 100% increase in mobile and e-transactions. The onboarding of Mr. Atif Azam, who's the tech star behind Venture Drive, is also a clear signal from the management on its focus towards digitization. A PMAP from our survey also saw the market sentiments towards app usage and interface, and we see Mizan emerging as a market darling. However, with its balanced approach to expansion, we see investments in IT to grow at a CAGR of 25% to north of 5 billion by 2025. With the long-term benefits of it stagnating the cost-to-income ratio by 45% due to massive reduction in customer acquisition and cost of doing business. Mizan also places a very high importance on its corporate governance. Their affiliation with the kingpin of corporate governance, Mr. Moin M. Fuda, is proof of that. They operate with low attrition and high satisfaction. And while the bank's efforts for more inclusion of finance is commendable with an improved diversity ratio of 9.1, the Titanic does take time to turn, and we look to Mizan for more diversity in senior positions. As we can see, Mizan is also superseding its commitment with compliance to the SBP and the UN SDG goals. And with a very high ESG score of 8, the bank is focused on more than one form of green. Now taking it over to Mizan.
Last but not the least, a convection from Mizan emerges from the growth story of Al Mizan. At 177 billion of assets under management, Al Mizan is all set to follow a similar growth path to around $400 billion PKR of AUMs by 2025. Much like a banking, Pakistan is an underpenetrated market for mutual funds as well. India's AUM stand at 13% versus a mere 2% for Pakistan, signifying a potential for growth. Regulators' initiatives for digital onboarding will increase investments in the mutual funds, and capping commissions for life insurance sector will help AMC industry cover some lost ground. Value migration into Islamic is also evident in the AMCs. In the last decade, only Sharia-compliant funds have witnessed an inflow, and we expect AUMs to make up around 53% of the total market by 2025. And Mizan's brand in this Islamic space is an edge and will make 25% share in the AMC. As a result, the PAT of Al Mizan will increase at a CAGR of 25%. The asset-light business model and ROE averaging at 35% in the future, we believe Al Mizan can pay out 70% consistently, contributing around 3.5 billion of dividends to MEBL by 2025. And this asset as a shareholder of Mizan Bank is too good to ignore. Coming towards the valuation, we value Mizan Bank on two fronts, the bank at 150 per share and the asset management at 12 per share. Our valuation of the bank places 75% weightage on the cash flow based valuation with equal weightages to justified price to book, justified price to earning, and residual income methods. The key assumptions include cost of equity of 16.3% and a growth rate of 10.5%. Secondly, our multiple-based valuation takes an average of the industry 5-year average price to book, where we have adjusted for Mizan's premium ROE versus peers. We have given this relative valuation a methodology of weightage of 25%, giving a total of 150 to the banking business. On the asset management front, we have valued the subsidiary at 12 per share for Al Mizan, giving a higher weightage to DDM and relative regional because we think that the local listed peers are not representative of Mizan Bank's size. Hence, we value Mizan Bank at 162 per share.
Mizan faces a range of risks, but we feel two pertinent ones as an investor at this stage are: one, wiping out benefit of spreads on savings account, and two is succession planning. Mizan has enjoyed super profitability and high policy rates. So can this be sustained? Islamic banks get penalized on the asset side, and there's a 75 to 100
1 minute
BPS
left,
difference
please.
between long-term government bonds for conventionals versus sukuks. We factor a negative 50 BPS spread on all sukuks and FI lending, and a level playing field will result in less than 10% decline in net spread.
Thank you. Now moving on to the succession planning. SBP's age limits now require a change in upper management, but we feel this risk is hit smoothly with the League of Extraordinary Gentlemen, both internal and external, handling Mizan's affairs. With an enabling growth environment, a strong digital front, fast branch resumption, Pakistan's top 2 banks is now going to be one of Mizan with a buy call of 162 with a 42% upside. Thank you from Team Viper.
Thank you. If the presentation is ended, may I request the judges to start the question answer session?
Sure. This is Naveed Goraya, one of the panel judges. Thank you for the presentation. I know you've done some analysis of deposits per branch and also looked at the competition. Why don't you take a step back and take a look at the overall industry landscape, conventional versus Islamic, and then the growing attraction or the growing trend of the Islamic bank entrants coming in. There's Faisal Bank that's coming in. There's some Islamic banking windows that are taking more aggressive approach. How does Mizan stack up from a strategic perspective? Yeah, go ahead, please.
Yes, Fazan, could you please in deposits go to appendix number 6? So if we consider the top 5, Mizan is already going way, it is already increasing and continuing on a pace that is knocking on the doors of top 5. This is with the CASA. And could you go back to the main page, please? I'm also going to talk about the CASA per branch and the coming in competitors such as Faisal Bank. So could you show appendix number 10, please? So here we know that, sorry, this is, go back please. But we know that Faisal Bank is actually a big contender. They have a number of branches that are coming up. In branches, could you go to 10 others, or 27? And Faisal Bank is a close contender, but we feel that Mizan's aggressive expansion in the branch network has already set it apart, and it has given it an advantage. So if we can see the 5-year CAGR, it has some of the highest in total deposits. And Faisal Bank is converting. They have already converted a large number of their branches to Islamic banking. But again, Mizan has become synonymous with Islamic banking. Mizan it is expanding into rural areas, which is a largely unbanked population. And they have identified that agriculture and SMEs are the next big market. And this is where they tend to gain the most.
Okay, thank you.
This is Sayyid Salman Akhtar, Judge 4. Can you go back to your valuation? Okay. The justified PB one first. Don't you think that the sustainable growth rate of 15%, I mean, it's on the higher side? You can't use, I mean, I believe you can't use this retention rate into ROE for your sustainable growth rate in case of a bank. I mean, bank can use other modes of capital also. It can issue several forms of capital, and it can also issue many types of bonds. So in order to grow, so retention rate is not that important. Don't you think linking it with nominal GDP growth rate would be a better measure? Number one. And second, what is your sustainable ROE? I could not see that.
So,
I mean,
first of all, we have taken, Mizan Bank has one of the highest ROEs in the industry, and that is giving it a high sustainable growth rate. We do understand that this is a high number, but this is exactly why we have considered M2, the nominal GDP, as well as inflation, because we did not want to skew the data by using a sustainable growth rate alone. And we're factoring in the output that an economy is producing, in addition to inflation. Can you go to the appendix, please, Mizan? And in valuation, can you go to the justified PB and residual and yes, probably. One back, right? So here, as we can see, Mizan Bank has a ROE that is above the industry average. And this is basically what's giving it a high value. So this is why we were bringing in the other factors to minimize any skewing of data, like you were mentioning, because 15% does seem a little high. And Walid, do you have anything to add?
And what is your sustainable ROE assumption? I could not find that. I mean, is it 27%?
It's the 5-year average.
No. What ROE have you used in your justified PB model?
Yeah, it's 27%.
Don't you think it's too high? I mean, wouldn't it be better to use a two-stage Gordon growth sort of thing, one for the supernormal growth period and then one for the normalized period? Because no bank can have a sustainable ROE of 27%, I believe.
Yeah,
maybe for 5 years, 7 years, maybe. Don't you think valuation gets very high because of that? And then with a G of 14-15%,
we do agree to your.
You should mellow it down a little.
Yeah, we do agree to your point of a high ROE, but this is the beauty of this bank. And since it has a historic ROE of ranging around 35 to 40%, and the forecasted also goes around 35% because of the growth, because of the size of the bank, because of its scaling, because of its branch network, and everything adding to a high ROE and high profitability for the bank. So that is why we decide that we see that it is a different growth story, and no other bank or in the industry, Sharia or the convention is comparable.
Okay.
So I had a question. Sulaiman, I assume you're done with your questions?
Yeah, done and dusted.
Okay, so just one quick question. You mentioned IFRS 9 as one of the risks to your thesis. So could you just shed light how your thesis changes due to IFRS 9?
Yeah, I would like to add to that. Well, IFRS 9, what it's going to do that it will, the next financial statements that the bank releases, they will have to keep a separate section of it. And we suspect that this will revamp the provisioning of the bank, and a surge in NPLs will be expected. So when we built our forecasting, we incorporated a 2.5 billion credit cost. If you could go to credit risk at slide 56. Yeah, so what we did is that in our NPL formation, we built a 2.5 billion credit cost, and we decided that if the bank is going to increase in NPLs, and we expect such a surge to come in CY21. So what is going to happen is that this will bring a small risk to the credit book. But in the later years, we believe that since the bank's provisioning has always been above par, they have been very prudent in this manner. We believe that this NPLs will sustain in the future years, and they won't have to sustain. We did ran a sensitivity on it. Could you go to the next slide?
Last 1 minute left.
No, the next slide. Okay, back.
Okay, that's fine. Since there's just 1 minute remaining, I just also wanted your view. You mentioned that FATF will help the banking sector deposits. Shouldn't it be counterintuitive with increased documentation requirements? Shouldn't money be flowing out of the official system? So just wanted your thoughts on that.
Okay, so thank you so much for your question. We believe that increased documentation will actually be a earner for more liquidity into the banking system, because an increased documentation will reduce currency in circulation. And with reduced currency in circulation and initiatives such as RAS, Zain, can you please mute your mic? And with initiatives such as RAS, which will enable instant payments, we believe that the amount of money in circulation will reduce, and that will eventually end up having a positive effect on banking deposits in Pakistan,
Time's
rather
up, please.
than a detrimental effect.
Thank you.
You're welcome.
Thank you. May I request Team Viper to please leave the room, and may I request the judges to please fill the evaluation sheet. Okay, your time starts now.
Good evening. This is Team Non-CFAs, and today we are going to present Mizan Bank, the largest Islamic bank of Pakistan. Mizan Bank has quite diverse shareholdings, and it has a major shareholder of New Financial Investment Company, and that is followed by Pakistan Kuwait Investment Company. While New Financial Investment Company is operating in Kuwait, Middle East, Asia, and other emerging markets, New Financial Investment Company is dealing with direct capital market investments and other financial advisory services with a $1.7 billion equity since 2005, and Nissan Bank is one of the companies in its portfolio. Kuwait Investment is a joint venture between State Bank of Pakistan and Kuwait Investment Company Authority that has initiated its company to 6.9 to 62.5 million, and that is having a whooping healthy deposit total equity of 8.9 billion. Mizan Bank has over 800 branches nationwide and 660 ATMs in 240 cities of Pakistan. Mizan Bank has highest deposit growth rate, and that is the major USP Mizan Bank has, that it has growing online banking customer base also, with its banking app rated as the top app in Google Play and Apple App Store. Looking at the historical performance of Mizan Bank, it has a quite good performance as compared to other banks, and it is now trading at 112 rupees. We have evaluated Mizan Bank looking at the 4 key strong measures that are market position, efficiency, profitability, asset quality. And for that reason, we have given it a buy recommendation at a target price of 141.9 per share and an upside potential of 27% at January 15, 2021. So Mizan Bank has a quite good and big deposits, that is over 1 billion rupees, and its mobile banking system is also growing, with its online banking system also growing, with financial transactions through mobile bank app grew by 104%, and POS transactions grew by 27%, and e-commerce transactions grew by 119%. So Mizan Bank has quite superior competitive positioning as compared to its peer, with greater ROE generation, higher ROA generation, better CASA, and it has the lowest NPLs, that is 2.4% as compared to 7.18% for the peers. So Mizan Bank can be called as a proxy to Pakistan Islamic banking growth because of its CAGR of 25% for last 10 years, and its asset growth is also growing at 25%, and that is because of the reason that it is a first mover advantage, and that goes with the healthy deposit mix, and also as the GDP Sukuk issuance are increasing, that is in the energy sector, so their investments are also increasing, and it is expected that the coming 5 years will be having a deposit growth rate of 12%. Furthermore, Mizan Bank is very considerate of its environmental, social, and government aspects because Mizan Bank has launched 200 kWp solar power plant, Kisan Bank, Better, which is initiation for rural banking, design thinking workshop for its employees, and furthermore seminars and conferences that it conducted during the lockdown period and benefited its employees. So the CAGR analysis of 2014 to 2019 says that Mizan Bank is quite good at performance while its deposits are 25% as compared to the scheduled banks which are having 13% only, and same goes for the loans, assets, and investments, as you can see. So now turning to the efficiency, we have Shiraz for explaining this section. Over to Shiraz.
Mizan, which gives Mizan Bank, which gives Mizan Bank an advantage over its competitors to pay lower than its competitors. We expect that the annualized CASA is 76% of Mizan Bank and its projected cost of funds is 3.9%. Mizan Bank is also beating its peers in maintaining low cost to income ratio in the third quarter of 2020, which was 39.79% versus the most efficient banks of 40% to 45%. We expect that the cost to income ratio will be maintained at 56%. We see this higher cost to income ratio as an opportunity more than a threat, because as the interest rate rise, the income will also rise quicker than the ROA generation. In ROA generation, Mizan Bank is also beating its competitors. Its annualized ROA for 2020 is 1.89 and it will be 1.32 on average in the coming cycle of 22. Its efficiency shapes its profitability. Mizan Bank can deliver sector-beating ROEs in excess of 20%. It will rise from 30.7% in CY19 to 37% in CY2020. We believe that ROE will be sustained at 20% with the rising interest rate environment of Pakistan and healthy capital generation. We believe that they will maintain a payout of 40% and dividend yield of 5%. As we know that they have low cost of funds, which gives them strong NIMs. It was 3.4% in CY17, which increased to 6.1% in 2020. We believe that NIMs will be sustained over 5% in coming cycle of 21 to 25. Strong revenues supported by the growth in fee income of 20% have given them advantage to attain the bottom line growth. We expect that the non-funded income will be sustained at approximately 17%.
Moving further, the Mizan Bank has 1.25 trillion in deposits, which is 7% of the total industry deposits. Among that, the 68% are the individual deposits who will stay loyal with the bank irrespective of.
Could you please speak up? Could you please speak up slightly?
Yeah, ma'am. Mizan Bank have a deposits of 125 video out of my. तुम्हारी न्यूज़ को बताओ. Mizan Bank has the deposits of 125 trillions, which is 7% of total overall industry. And among that, the 78% are those individual depositors who will stay loyal with a bank irrespective of their interest rate fluctuation. Moving towards another additional advantage which Mizan Bank has is the lower saving deposit rates, as per having no floor over deposits, saving deposits. Coming towards the key factor which gives us to have a buy call for Mizan Bank is their best asset quality strength. As per the measures, they have maintained the NPL of only 2.4% and a specific coverage of 89% and a total coverage of 136%. Moving over, we expect the IFRS 9 implementation in this year, which definitely will lead us to bank have suffered a lot. And good good opportunity for Mizan Bank is they have already maintained a strong capital buffer, so they don't need to worry about. And they have a 20.99% CAR ratio, whereas the requirement is to maintain only 12.5%. And moving further, they have a tier 1 capital which is expected to be 16.34% by 2022, and their CAR is expected to be 20.36% by 2022, which leads them to have a payout of 35 to 40%. Coming towards the valuation, we have valued the bank via 3 different models. A residual income model which gives us a target price of 1
minute left.
Gordon growth model gives us a valuation of target price of 136, and their relative valuation was justified. We took some assumptions such as a risk-free rate of 10.5%, which is a 5-year BIP rate, and the equity risk premium of 6% as per the market survey, and the market beta of 1, which gives us a cost of equity of 16.5%. And via the CFA model, we arrived to have a buy call for Mizan Bank as per the 12-month target price of 142, and effective rate will be 3.32%, and the PE is 6.57, price to book value is 2.23%, book value per share of 15 rupees. Why we choose to have a buy call via residual income model? Because the model uses the book value as a base, and the book value is important for the bank, and it also reflects the potential.
Time's up, please.
Time's up.
It takes in account that the portion of book value is stock. Thank you so much, sir. This was already a last slide.
Thank you, Team Young. May I request the judges to please ask your questions?
Yeah, ma'am.
Assalamu alaikum. I'll just start off. You said they have advantage of low-cost deposits. Don't other Islamic banks even have it? Like, what's so different about them? How are they going to drive it in future? Plus, IFRS 9, can you just explain what it is and how does it impact the valuation?
Almost 68% individual customers which do not fluctuate as the interest rate fluctuations. So that's why their deposit is has an advantage over others.
How is it going to grow?
Ma'am, what?
How is it going to grow? I do not see that point in your presentation. That how will the growth come in, the future growth?
In a cost income?
In the deposit, you said it's a major driver that they've got low cost deposits. How is the future growth coming in for them in deposits? I don't see any mention about that.
Ma'am, because low cost of deposit in a saving rate. We talk about the saving deposits are
And also
low as related to other conventional banks.
You're telling me they're going to increase their deposits? Just tell me how.
because their customers are loyal and they have a first mover advantage in the Islamic industries. Customers trust more in Mizan Bank. Also, they are expanding their network. That's why a network of branches.
Ma'am, there is a driver. They have a 68% of individual depositors. Those are with banks because of they provide them a Islamic related solution for their funds. That's why they are loyal with a strong brand position of.
Okay, what about IFRS 9? How does it impact the valuation?
Ma'am, it wouldn't have affect the valuation, but we said they have already maintained a strong capital buffer, and IFRS 9's requirement is to maintain a such a capital buffer our risk-weighted assets. So that's why we said they have already maintained a good capital buffer. So their IFRS 9 implementation wouldn't hurt bank this much as it hurt other banks in industry.
Okay, thank you.
Hi, this is Fawad Khan. I am a judge here. I have a question on the risk-weighted asset. Currently, the bank is heavily loaded. In fact, one of the area, one of the asset deployment is the investment into the government securities. Let's suppose if the bank start lending to the private sector, how that scenario would impact the risk-weighted asset and the ROE and the dividend payout by the bank.
Give it to the private sectors, they have to
Yeah.
maintain buffers for it, but they
Can you please speak up? I can't hear the answer.
Sir, we are saying they already have a very risk-weighted asset of 1/3% of their total assets. So they won't hurt bank that much, and ROE will definitely increase in such context.
So you're saying the risk-weighted asset will not be impacted in case the banks start more lending towards the private sector?
Sir, they have already maintained a strong capital buffer against their risk-weighted assets. As per requirement, they have to maintain 12.5%. They have maintained 20.99%. Their risk-weighted asset totally is 1/3 of their assets. So we don't see that this would hurt them that much.
Okay,
Also, sir, if the GOP sukuk are already there, but if it goes to the private sector, then there may be a more risk than the other sector, that is GOP. But as Fiza said, there's a capital buffer, so that would not hurt them as much as other banks.
So would it impact the RWA, risk-weighted assets?
yes, its proportion will increase.
Yes, only proportion will increase, but they
And
already
any
have
impact on the payout going forward?
If the risk-weighted assets are increasing, it means that they will also have the ROE increase, so they may also increase the payout.
Yes, sir.
They may also increase the payout.
Increase
Okay,
their
sure.
Yes.
Okay, can you give me 3 reasons why I should buy Mizan Bank, why I shouldn't buy Bank Islami, which trades at 0.6, 0.7 price to book, Faisal Bank, which trades 0.5? Why I should buy Mizan Bank? The story is done and dusted. It's like, let me complete the question.
You should apply Mizan Bank. Sorry, sir. I thought you had something.
Please go ahead. Yeah, 1, 2, 3 reasons. Need to be very crisp, please.
Sir, the three main reasons why we are recommending the Mizan Bank to buy is their strong market position. Their customers are really loyal with the bank. They won't leave bank because of their interest rate fluctuation and their Mizan Bank's profitability. And the third one reason I will give is their best asset quality. These 3 reasons are the key reasons that drives their value to the premium.
And what are the key risks to the bank valuation and to your thesis? I guess perhaps you didn't get the time to finish that.
Risk.
The key risk.
Sorry.
Key risks are for the bank are that the political risks. Now today the government is focusing on the sukuk funds. Bank is relying on these. This is the risk, but political risk. Another is bank's model risk. Bank is currently charging paying very low as compared to its peers to its depositors. This may affect the bank's model profitability, because if customer gets something more from other banks, they may switch.
Right. Yeah, just 2 risk, or there are more risk to the investment thesis?
We have covered these 2 risks.
Okay.
Naveed, you want to add a question?
Hi. No, I think this was the questions were sufficient, and I'm okay. So if anybody else wants to ask a question, please go ahead.
May I ask the question on the digital efforts of Mizan Bank, how it may impact the profitability going forward? Which areas you think that Mizan can target in terms of digital efforts going
As we
forward?
told that Nissan Bank has quite top-rated Nissan banking app, and also the customer base for the online banking is ever growing, and it has a over 500,000 customer base that is all actually using the online system of banking. And in the Islamic industry, Nissan Bank has the highest customer base that is going for the online system. So this is also going to increase the transactions, and the profits are also going to be growing.
Sure.
Sir, the Mizan Bank is a pioneer who leads banking industry to the many technological innovations. So this is also added value.
Sure.
The last 1 minute left.
So I'll just add a question. In terms of your valuation assumptions that you've taken, you didn't get a time to explain to us in a lot of detail, but what are the key assumptions you've used for growth? I'm specifically interested in that.
Yeah, sir. Should I go with a model? So we cannot
Just explain to us what you've taken as the sustainable growth rate assumption and why.
Sir, we have taken as yes, sir. We have assumed that the growth will be the 12.5%. Actual growth was, as per our valuation, was 13%. 13% we calculated we are having average of our forecasted growth versus our historical growth. It was a 13%, but we take at 11.5% to be on a safe side.
Thank you so much.
Thank you. Your time's up. Thank you so much.
Sarwat, if I may just, so I'd like to thank Team Young. Good job, well done. So sorry, just wanted to add the comment.
Thank you, sir. Thank you, sir.
Good job, Team Young. Good job. Keep it up, please.
Rahim. Assalamu alaikum. Good evening, all. Honorable faculty members, colleagues from financial markets, judges, mentors, organizers, including our program chair, Asper Naseem, and last but not the least, the management of Mizan Bank, and really appreciate the personal interest of President and CEO Mizan Bank, Mr. Irfan Siddiqui. A big thank you to all for encouraging students and bringing this event to a collaborative close. This is the 13th year and the first online research challenge, and with the exception of small technical breaks, I hope the experience was not too distracting for all participants to engage. And next year, hope to see you all in person. So about 90 students got a flavor of what an analyst day looked like. 19 universities and their faculty members were engaged, who supported students prepare for this competition, since this is part of CFA Institute Global Research Challenge. Globally, there are more than 5,500 students, 1,100 universities, and hundreds of professional investment analysts and fund managers helping these students be the best. And the best part is that, again, more than 40 of the local analysts, fund managers have generously contributed their time and shared their professional knowledge with these students. This is again an investment in the young professionals of the future. I'm really proud of the professional community here in helping me bringing this event here. Naveed Guraya Saab, Imtiaz, Fawad, Suleiman, and Usma. Thank you for sitting here for several hours listening to the students as judges. There were professional analysts and fund managers who served as students, mentors, and graders as well. In helping students in preparing these reports, we are really grateful to all of you. As per CFA Society team, thank you again. I wish the best to the winner of today's event, who will be competing at the global level. and I hope you will make us proud. I would now like to welcome President and CEO of Mizan Bank, Mr. Irfan Siddiqui, who needs no introduction. However, I would like to mention one thing is that probably you would have noticed that almost all the forums have voted Mizan Bank this year as the best bank of Pakistan, including the CFA Society Excellence Award, where Mizan was announced as the best bank of the year. I believe Mizan Bank's story is one of the most exciting investment ideas to tell to the global audience of Pakistan. And to the dear students who will win today, you have one of the best ideas to go and tell to the global audience. With that, I would like to one more thing add is that Irfan Saab and management team of Mizan has been so impressed with your efforts that he has announced cash awards for the participating teams and the winners, and that will be announced with the results. Till then, I would request Irfan Saab to please join and share your thoughts. You're welcome, sir. I think Irfan Saab needs to unmute. I hope we have done that from our end. Yeah, okay.
Okay, right. Bismillahirrahmanirrahim. Assalamu alaikum, everyone, including the participants, judges, everybody. And thank you so much, Asim, for talking about Mizan Bank. I think it really makes me feel very happy that, so many students would go through Mizan's experience and the experiential learning about how Islamic banking has actually evolved in Pakistan. And my appreciation to CFA Pakistan for really hosting this event and selecting Mizan Bank as a case study. I was able to listen to 4 of the 5 presentations today. The first one I couldn't because there was a meeting at Habib Bank which I had to attend. But mashallah, very impressive. And I must admit that there were a lot of facets which I was thinking that, oh, okay, I mean, is that how it is? Both good and bad. I mean, but for example, people talking about cost income ratio rising in the year 5 years down the road or whatever. So I think I would definitely go back to the drawing board and see कि यार मतलब कि ये सही है या we need to tweak our things a little bit. Otherwise, sometimes you get carried away and opening more and more branches, and you find out कि यार 5 years later you can't roll back those things. So obviously these things are important for you to look back and think about it, because these young students of today will be the future leaders of tomorrow, inshallah. And I hope some of them would be able to have leadership role in Mizan Bank and other Islamic banks in the years to come. So initially I thought I'll share some of my storyboard of Mizan Bank, but then I realized that probably these young students know more about Mizan Bank than I do, because they've done a lot of research. In your daily life, you sometimes tend to omit a lot of things which you should be knowing. So I would still take this opportunity only as a motivation to our young leaders of tomorrow to let you know how Mizan actually came about. So I was on secondment from government of Kuwait, which is the Kuwait Investment Authority, to a company in Pakistan called Pakistan Kuwait Investment Company. So I was here as a Kuwaiti government nominee here. I came back in 1990. Then I think 4 years down the road, my wife decided to go to Quran classes, and the very first surah of Quran, Surah Baqarah, has got the the prohibition of riba, why it's prohibited and all that. And she came and talked to me about it. I wasn't aware of that myself. So first I deflected her by saying, yeah, it's not the same thing. It's interest is not riba, which I was also saying that kind of thing, which we feel a lot of people are saying now. But sooner or later, I realized that after meeting Taqi Usmani Saab, that, it is the same thing. So Uswa decision-making point was that, I leave Mizan Bank and try to do something different. But obviously, being in the banking sector all my life, after qualifying as a chartered accountant, I felt that, if I don't take this step of setting up an Islamic bank in Pakistan, then, you can't expect an engineer or a doctor or even a mufti to come and set up a banking institution. So that was the journey of Mizan Bank, and we started Al Mizan Investment Bank. And alhamdulillah, it was a great journey, difficult journey initially. Shuru mein, I saw a lot of IBA students here as well. We used to call IBA students for interviews and jobs. And, if we interview 5 people, we would, if we offer to 4 of them, and you would hope that at least 2 would join. Initial period, nobody would join us because their thinking was that, there's too much risk of joining an Islamic bank. What if it doesn't succeed? We won't be able to get a job elsewhere. Alhamdulillah, things have changed. Mizan has become one of the employers of choice, and people are coming and joining Mizan Bank. So, mashallah, we have now 12,000 plus staff members. Or Allah ka shukar se, lot of good professionals, including a lot of CFAs, chartered accountants, IBA alums, KSBL graduates are joining us. So main reason jo Mizan ki success, I would say that, when we started that, it was a faith-driven decision. It wasn't a commercial decision. There was no feasibility made for Mizan Bank. Ke bhai hum ye invest karenge, so this would be the return. So it was a faith-driven decision. And I really feel very strongly that God has given, what we call barakah in this, which I don't know what is the English equivalent for barakah. I can't think of one. But that's what Mizan has received from God Almighty. So I think agar niyat saaf ho, you work in the right direction and you're honest, then success really comes to you. So no matter which profession we are in, I think if we follow that principle, that we should stay aligned with our vision, mission, and the objectives, then I think, only success will come. So I would really encourage कि जितने हमारे team members हैं यहाँ पर ये 5 के, तो I would invite you. Tariq यहाँ पर है, हमारा Tariq is our head of risk. He's a CFA charter holder. So maybe if Tariq can be appointed as a point person, so please do visit Mizan Bank. Come and make a presentation to our senior management team as well, all these 5 teams. And if you're looking for whether internship or a job, do apply for in an Islamic bank, and Mizan Bank would be more than happy to meet with you and see where we can use your expertise going forward. So I think with this, I would say all the best to the winning teams, especially to the one who is going to represent Pakistan internationally. So I think Pakistan ka flag high lehraya, or in process, I think we'll also get a collateral benefit of you exposing Mizan Bank to the rest of the world, inshallah. So thank you so much again, and all the best for the future. Assalamu alaikum.
Thank you, sir. We really appreciate your comments and the support offered to students as well. The society will definitely contact you, and students can contact us to arrange the visit to Mizan Bank and the management as well. So now I guess, Savat, we have a message from SECP chairman, who himself couldn't join because of another conflicting engagement, but he has been kind enough to share his message. So let us listen to him.
Bismillahirrahmanirrahim. Mr. Irfan Siddiqui, President and CEO of Mizan Bank. Mr. Muhammad Asim, President of CFA Society, Pakistan. Mr. Muhammad Shuaib, Advocacy and Gibbs Chair, CFA Society, Pakistan. Ms. Savat Ahsan, Executive Director, CFA Society. Guests, students, judges, volunteers, and Board of Directors of the CFA Society, Pakistan. Assalamu alaikum. Congratulations to all the participants of the CFA Institute Research Challenge APAC Sub-Region Regional Final. This year's participants deserve double applause, as they have exhibited great resilience and perseverance by participating in this event, despite the greatest public health crisis of our lifetimes. It is a remarkable feat that in its 13th edition of the event, the teams have been able to deliver quality results while having to deal with extraordinary circumstances. circumstances, and faced with the added challenge of analyzing the target company in an uncertain economic environment. It gives me immense pleasure to congratulate the winning team from Pakistan, which bagged the first position amongst competing teams from Malaysia and Singapore. I hope that this focus on promoting the highest standards of ethics in the investment industry will be a regular feature going forward. The need for ethical decision-making in the investment industry has been highlighted several times in the past, but especially during the global financial crisis of 2008. The CFA Institute has been a champion in this area and has always emphasized the paramount importance of the integrity and ethical values in capital markets and the investment profession in general. I would like to applaud the efforts of CFA Society Pakistan for organizing such competitions year after year to instill the highest standards of ethics, education, and in the country. Such competitions are a great tool to prepare students for the real life scenarios where they will need to excel in their analytical abilities and prove their competence in the areas of research and investment management. The society's invaluable commitment to nurturing future professionals and its advocacy efforts for market development, and its research related to contemporary topics like fintech and promoting Islamic finance are highly endorsed by the SECP. Considering our shared values, the SECP has also introduced HR policies designed to encourage CFA certification among its ranks, not just by offering scholarship opportunities to existing employees, but also giving due weightage to CFA charter holders as part of its recently launched graduate trainees program. At the SECP, we are always keen to support such initiatives to foster competition and inculcate ethical decision-making, both internally and in our regulated sectors. We are striving to create an efficient and transparent business ecosystem by ensuring that our policies and decisions conform to the values of objectivity, integrity, and equitability. We are also steadfast in our actions to introduce reforms in local markets by promoting transparency, ensuring consistent regulatory actions, and leveraging technology to enhance ease of doing business. These reforms are designed to build and sustain the trust of investors in the financial markets in Pakistan and promote financial inclusion at the grassroots level. I would also take this opportunity to offer some advice to all the students present here and encourage you to constantly and continuously strive to make a meaningful impact in the professional world by following the three simple and effective 3 V's principle that I'd like to talk about. The first V is vibrance. It means you should be positive, proactive, and willing to go the extra mile. The second V is velocity. It means you must be a doer, take initiatives, complete assigned tasks efficiently. And the last V is virtue. It means you should be ethical and cultured in all your dealings. Once again, I would like to congratulate the winning team, which will now compete with the winning teams in the Asia Pacific region. I hope and pray that they can make it to the global final as well. Thank you and all the best.
Really heartening, really encouraging comments from the SECP chairman. I'm sure students will feel very encouraged and I hope that you do also very well in the competition ahead. I guess, Savat, with that, we can move to the announcements, or you would need a couple of minutes or so.
Thank you. So I would request Mr. Imtiaz to please, the judge to please step in and give us the feedback and the winner's name.
So we let the judges announce the results, and Imtiaz will be representing the panel of judges. So Imtiaz, please.
Thank you, Asim. Thank you, Sarvat, and thank you, CFA Society, for giving us all. I speak on behalf of all of the judges. So for giving us an opportunity to be a part of this prestigious event. It's like the crown jewel of the number of things that CFA does all around the year. Obviously, a special word for all the teams that have participated, obviously coming through the rigorous process of the report and all those evaluations, and then presenting your case at this forum. It is very, very heartening to see the level of detail with which you guys go into your models and the way you look at these companies and the way you analyze this. I do have to say that, when you are dealing and you're presenting a case on something like Mizan Bank, which is a very well-covered bank, the story is very well appreciated within the Pakistan capital market space. For you guys to come in and present it in a unique way and have your own unique thoughts added to it. So for us as judges, this is something we were discussing that was very unique, and that was something that we were very impressed by. That, even a well-known story can be packaged and presented in a way that makes it very interesting to hear. And as I think Irfan Sahab also alluded, at times there are things that a fresh eye can look at, which we even as market participants don't look at on a day-to-day basis. Sometimes we miss those angles. So a couple of things were very, very innovative. We really liked how you guys had approached it. It also gives us a fresh perspective on how to look at this. So we'll not take a lot of time and come between you and the results, but yes, on behalf of the judges, I would really like to congratulate all the teams that presented today. All did very well, and it was a very close competition that happened. And Sarwat, let me know whenever we're ready. So I will not make the teams wait for too long.
We're
okay,
ready.
we're ready.
We can start with the run-up.
Okay, so basically the runners-up for today's event is Team Phoenix. That is Team 2 of IBA. So guys, if you could just turn on your video and let everyone see the runners-up for today, that the team that was runners-up. In fact, if you could wave your hand, everybody can put a face to your name and know which team has come as runner-up. It's Team Phoenix, Team 2 of IBA.
Congratulations, Team Phoenix. On behalf of CFA Society, I would like to add just to your excitement as well that from the Mizan Bank team, there is a cash award of 100,000 rupees for the runner-up team.
I think that is an unprecedented and very grand gesture from the Mizan management.
Thank you. Thank to the Mizan Bank
May
management.
I request a big round of
encouraging
applause
us.
for everyone?
Sarwat, are we ready to move on to the main announcement or the winner of the event?
Yes, we're eagerly waiting.
Just don't play with the hearts of students.
The winner of the event today is Team Viper KSBL. Guys have been rated as the best team on display today by the judges. So congratulations on that. And we have all of your pictures on screen.
Congratulations, KSBL team. Would like to add here again an award of cash rupees 200,000 for you from Nissan Bank team on winning this competition. Congratulations, team.
I request the team to open the video and please at least wave at us and may the
show your
person
faces. There are several recruiters here who would be looking to probably call you for interviews as well, because this event has become one of the recruiting grounds for several analysts, including my own team as well, because you have worked hard, you have done well and learned with the professional analysts. So you are one of the better candidates for recruitment within the investment industry. So congratulations for that again.
Thank you, team. And I would request all of you to please switch on your videos for one snapshot for us. Congratulations for Asman Gupta, the faculty, congratulations, the mentor and everyone else who has been involved with the winning team. And may I request everyone to please switch on their videos for us to capture.
But there is one more announcement from Mizan Bank, and that is for the other participating teams in this final competition. There is a cash reward of 75,000 for the other 3 teams who have been in this competition today. Again, generous award from Nissan Bank. Really appreciate the support and encouragement to the students.
So may I request a group picture and is that all? Is anyone else switching on the videos? Rena, are we good? Great. So thank you, everyone. Congratulations to the winning team. And any last words from you, Asim, before we close?
Yeah, usually we announce dinner at this moment, but I guess we can announce that and you can have it while wherever you are. Let's hope next year we meet in better physical conditions where we can do this event physically like a tradition that has been for every year. So with that, we really thank again all the volunteers, all the mentors, judges, faculty members, all the CFA Society team, and all the volunteers and the Mizan Bank management team. Alfonso, again, thank you again so much. Thanks to the SCP chairman for bringing this event here. So looking forward to the next year. Thank you very much. With that, we wish best of luck to the winning team for their regional participation. Go win the challenge, bring the award to Pakistan, make us proud. Thank you very much.
Thank you, Asif.
Thank you, Francois, and everyone else.
Thank you.
Allah.